it scares me that I would have to rely on so many third-party trades if I got 500 or 1,000 doors.
We have hundreds of units. We don't have anything empty, and we'll get 20 calls for you. Like it's something I never thought we would see.
All of that has gone up 20, 30, 40, 50%.
Where would you say the first kind of break point is where you would look at doing vertical integration?
A lot of smaller cities across Canada, you're going to find a lot of places where we're still building 12s and 18s and 16s and 24.
So today on the show, we have Tony Leblanc. He's the author of DoorOpener. For me, it's a really cool story. I started, when we got into multifamily, your book was one of the first ones we read. And I also gave it to the guy who's our CEO now. He runs the operations of the management company. I think there was a lot of things in there that resonated. I think you have a good perspective on property management. It's an industry that, can really beat people down. I think turnover is pretty high.
Yeah.
And it kind of gave a nice light on, on the industry and all the upside there are and how it can be a real business.
Mm-hmm.
So just for people, I guess, who don't know you, could you give us a brief history of, how you got to writing the book and then what's happened since,
Absolutely.
where you're at today?
Absolutely. It's great to be here. And yeah, thanks for getting the book. It means a lot. So grew up in property management my entire life. My mother ran a management company when I was a child. So grew up in the same apartment from the time I was born until I was 16. So I was exposed to every part of property management quite young, from cleaning hallways to mowing lawns to seeing my mother interact with other tenants and kind of dealing with that world. Didn't get into it as a business initially. My first career was as a software engineer, 15 years, did that with IBM. Had an amazing career, learned a lot of stuff, was able to travel the world. And it also allowed me to start investing young. So I bought my first triplex at 22, 23 years old. And I continued to invest, throughout that until I started my own management company. Decided in 2009, 2010 era to leave IBM because the traveling was getting to be a little bit much of myself and my little family. And I just looked back at kind of the family business, and I decided I'm going to open up a property management company. This is always something that I've had a great interest in. I know the industry. I know the dynamics of how to run a business. So started the company, grew it very fast. Within 30 days, I had 100 doors under management, still working for IBM. So I had to bring in a partner. And luckily, I was able to get my mother's right-hand man. So my mother hired my partner, Stephen, out of university when he was 23 and worked with her for 19 years as her property manager, management type guy in the company. So I made the call to him. He agreed. We became partners, and then we really never looked back. Within 3 years, 4 years, we had over 1,000 doors. And then we started expanding our views on what else we could be doing. So we bought a landscaping and snow removal franchise, started our maintenance division, started our cleaning division, and then things really started to change for us. And the idea of vertical integration within the property management industry really started to interest me, and I started doing a lot of research in the world of vertical integration. And it brought me to writing a book about vertically integrating other businesses within a property management company. So I released the book in 2018, 2019, around there, and it went well. Started coaching and working with other property managers across Canada and the US on teaching them how to transform their management companies into business platforms that they could then grow, incubate, or acquire other companies that help them service their management company, or was very well aligned with real estate in general. And we've been doing that ever since. We're still going strong at around 1,500 doors. We're acquiring and buying a lot of buildings ourselves, and always still buying new businesses to keep adding on and spreading the word.
So for people just starting, if they and let's say they haven't read the book, where would you say the first kind of break point is where you would look at doing vertical integration? Is it 500 doors or?
350 to 500 is a good number, because one of the number one importances about looking or wanting to go down the route of vertically integrating another business is the importance of your primary business being extremely stable. And there's a lot of things that you need to do before you start looking at other things, right? In the property management world, 350 to 500 doors represents a pretty good maturity in the business because very few people get that big. Usually 150 or 250 is kind of a good number of existing management companies that either make it or don't make it. So if they go past 250, they're probably going to do fairly well and they'll continue to grow. So at that point, you've got some scalability, you've probably got some infrastructure put in place, you've got an office, you've got a good team, you're probably making money, and you're stabilized a little bit. So 500 is better. The more doors, the more stability, the more income the money is generating. And then the further attached you are as the business owner from operations, the better. Because if you're going to look at another business, like it or not, it's going to take away a lot of your attention. So the mothership, as I call it, needs to be running very smoothly and for the most part without you. So if you can pull that off, then it's like I grant you permission to start looking elsewhere. If you haven't figured that out yet, then don't, because you could be jeopardizing the platform business or the mothership, and it's the wrong move to do.
So I get asked lots to do third, but we only manage for ourselves at this point. But we get asked a lot, people, there's not a lot of options out here and they're looking for good managers. My worry has always been that, we pride ourselves in our brand so much. And if we get in with someone and it's our brand on the building managing it, and then the owner decides that he's in a pinch and doesn't want to do proper maintenance or keep the property up, how do you deal with that when dealing with the investors or the owners?
Yeah, it's very challenging, right? I work with over 200 owners in all of my properties, and all of them have different personalities, different ways of running their buildings. So number one is to do proper screening. So when a third-party owner calls you, you just got to make sure that you guys are properly aligned, right? You got to make sure that from a maintenance perspective, from a overall experience in terms of what they're relying on you and the type of experience that you're providing for your tenants, and that they're not broke, right? Those are like three key things that you want to run away from if you kind of see any red flags in any of those areas, because it will 100% affect you, your brand, and your overall appearance from the public, because most of the time the public or the tenants don't know the owners. They don't see the owners. They see your management company. So if you do something bad, or you're labeled as some sort of slumlord, or you're doing anything and they call the news and the media, you're the one that's going to be spread all over the place. So it's aligning yourself properly with that owner, making sure that you guys have the same values. And a lot of the time you can do a pretty good job kind of sniffing that stuff out. But things do change, right? Things are getting more and more expensive. So it's something that you always have to juggle. You have to understand that this is a business for the other person. And sometimes you may have to make some sacrifices in terms of how you do things, meaning, well, maybe you would have renovated that unit to the nines, right? You would have did all the new flooring, you would have did the new cabinets, you would have did the new lighting fixtures and all this stuff, where this owner is like, I just want to do the bare minimum. And sometimes you got to be okay with that, right? And if you're not, then stick with what you're doing, right? Adding third-party owners complicates things dramatically, a lot. So make sure you're ready for it.
Yeah. So when you bring in when you're hiring someone who's new to property management, how do you keep, like, obviously you talk about it in the book, but how it does, it beats people down the industry. How do you keep that morale up, or like what's the kind of the pitch to them to see?
So I first, in all of my interviews, I warn them. I ask them probably 3 times, are you sure you want to come into this industry? Especially if they don't know anything about it, because those who don't know property management are always amazed by its ruthlessness and its complexities. They're always like, I had no idea that this was like this, or that people live this way, or people treated you that way, all these different scenarios, right? So we're very much like we treat ourselves like a little family. So our team is always about protecting each other. right? So we're big on making sure that we help support each other in challenging situations, and that we always protect the home base. Meaning, if there's a property manager that's having a good or a bad day, then we know that other people can either jump in to help if they're having a challenging situation. I'll take these phone calls or take the day off or stuff like that. So we go to great lengths to try to protect our energy and how much negativity we're surrounded by. So the motto in property management is the phone usually only rings when there's bad news. It's my toilet's leaking, or I want to move out, or they're complaining about something, or it's typically not great news, because that's why they're calling us. They're looking for help, whether if it's a tenant or an owner or whatever the situation is. So we try to do things internally where we have fun, that we joke, we have we have lunches, we have Friday afternoon beers and going out to a local pub, just different ways for us to be able to connect and disconnect from the work in itself. So luckily we're big enough to where we can share some of that with the world, through social media and stuff like that, we've got a cool culture, we've got an amazing office set up. And, this is, even though it's a tough business, it's still a fun place to work. And it's very gratifying from a career perspective, because I can take a secretary and I can work them all the way up to COO of a company if I want, because I've got 6 different companies and all these different ways that people can grow. So that's usually super attractive for a lot of people.
And are you a fan, I know people do it differently, of having like on-site property managers on a site if it's big enough, or do you run kind of like a squad system where 3 managers manage 500, whatever that looks like?
Yeah. In Moncton, we're not really big enough to have like on-site supers and a lot of the stuff, like you would usually see maybe in a 100 or 200 tower in a larger city. So we run a hybrid system. So we're maybe 20% departmental and 80% portfolio. So I've got 5 property managers, and they each have 200-300 doors each that they look after. So they take care of the owners, the tenants, they coordinate, they help with maintenance, and they kind of own the overall management of that stuff. And then we've got a small percentage of maybe some smaller properties that anybody can just handle if it's a small issue. So I do like the portfolio pod, there's different names that people call it, squad approach. I like that better, if you can get away, but you need to be a certain size and you need to have a certain asset class to pull that off. You need to have like bigger buildings for the most part, to try to have a portfolio of 500 or 600 single family, and then having a portfolio approach. It may be a little bit more challenging from just on the way that you're paying people, that if there's enough income being generated to afford that style, you may have to go with a departmental. It depends.
Yeah. For us, we run more of the squad way. We do have offices at some of our buildings, but we found right from the beginning, well, for one, technology is so helpful now. I mean, we're app based.
Game changer.
But when we were at the office, 90% of people just come in to chat, or they're lonely, or they're, when you're there. And if you keep it all online in a ticket system, it makes it a lot easier. Yep. But how, for you, how much has technology changed even since the book? Like, have you noticed a lot of stuff in your business that...
Yeah, we've, so coming from a technologist background, my first love in life was technology. I'm a software coder, like I'm very nerdy when it comes to that environment. So the first 5 or 6 years of our business, it's funny, I didn't pay attention to any tech. I had Buildium, which is our main software, but it was all about chasing doors. It was all about scale, grow. My philosophy in small business is you should grow it as fast as you can so that you can afford to hire the right people to do the right jobs. When you scale slowly, especially in property management, it can be incredibly painful, very painful, because if you're at these weird points between certain door counts and you can't afford things, it really sucks. Like it's a really, really tough business. So first 5 or 6 years, scale, all that. Then we're like, okay, now we're running into all these systems, workflow issues. And then it was a full dive into the workflow and automation world. And for the last, I think, 5 or 6 years, we've been 100% focused on, we use Monday.com as our main platform. I've built out an app inside of Monday that basically runs our entire business along as in the same time as all of our other businesses, from workflows to automations. We average around, I got the email this morning from Monday, close to 55,000 automations a month, from our screening applications to creating leases to doing our move-ins to doing our move-outs, maintenance coordination, support requests, preventative maintenance, like you name it. Everything has a built-in workflow inside of the technology, has certain key points in terms of providing automations, whether if it's communication, checkpoints, sending out emails, whatever you need to do. It's why I can run a 1,500 unit company with 12 people, right? It's not an army, because I've got an army of robots doing a bunch of cool stuff for us.
Yeah. Do you use, like, for your contact with the tenant, are you using like AI chatbots and stuff now?
No, not yet. We're certainly going to be looking at that, but right now we do not. We're seeing a lot of promise with a couple different tools out there. It's becoming more and more interesting, but right now it's all through traditional, email support, stuff like that.
Yeah, we're the same way. We're just now, I think within the next month, we'll get the first one where it's
it's the technology is getting better. Appfolio is another property management platform. They have a product, I think it's called Lisa, which is an AI bot for chats and stuff like that for tenants. I hear it's very good, and I know with the rise of AI that this stuff is going to be, if you don't have it, it's going to be weird. So I imagine we'll have it soon.
Yeah. Maybe you'll have 6 tenants or 6 staff running your 1,500 units.
Yeah, that would be amazing. The pocketbook would love that.
Yeah. So is Buildium still the one you use, the platform?
It is.
Yeah.
Yep. We don't love it. It does what it needs to do. However, property management platforms are only now becoming more open to playing nicely with other tools. So Buildium, Appfolio, Rentvine is another one, and there's a bunch more. Their APIs and their marketplaces are now starting to expand to where you can integrate with other tools. However, with Buildium in particular, getting access to their API is a quadruple in costs on monthly, cost for the software. So we just don't see the value in doing that. So we haven't looked at that as of yet.
And as Shirley, with your background, have you considered building an app yourself or building a platform out or not?
I have, but I know enough not to go there.
No.
No.
You go hard?
No, it was fun building the app in Monday, and it's fantastic. And I'm now at a point where I'm blessed where I've got 3 other people on my team that have kind of taken over the management of all the technology, which is a dream come true. But I don't want to be a software company. At least I have no interest in this point in my life. Property management software is a behemoth. It's massive just because it has so many different components, from client portals to full-blown accounting to, all the different type of ledgers that we need. It's very complex. So it's not in my roadmap right now.
Yeah. With the platform you have built out now, would it be very easy to move to a new city and just plug and play, or would it be?
Yeah, that's the idea. So I would say the last 9 months, we've been putting a lot of work into creating the different playbooks for the different companies. So the management company, it runs on its own. It does very well. It's good. Then we have another company, which is called Core Property Services, which is a combination of multiple divisions. It's got maintenance, snow removal, lawn care, appliance repair, cleaning. It's got all these multiple divisions. And that company is what really excites us. And that's kind of where we're seeing our future, to where we're looking for other property management companies to possibly partner with in the future, to where it's like, okay, I know how your management company runs. I can help you optimize it, but I've got this solution to help you bolt on one, two, three, or multiple different divisions. And I'm going to show you how to, run and create and build all of these through our playbooks. So that's something that we're looking at right now and as a possibility into the future, because it has a lot more upside than just running a management company. The management company is kind of capped in terms of revenue and how much money it can make. But the secret of the Doorpreneur way is to build a great platform business, incubate a new service company, let's say maintenance, build that to where it starts off by being utilized just by your management company. But as you learn the economics of the business and you get better at it, you come to a point where you can open it up to the public. And then you start growing it in the public. And then you want to get it to a point to where it's completely independent of your management company, that it can be there on its own if you want it to. That's what's exciting, because you've then grown it beyond your management company. And then you have different options. You can grow and scale the maintenance company into a construction company. You can do all sorts of stuff. Or you can keep it small, depending on where your vision is. So those other side businesses really have us excited, and those businesses are, 4 times the size of our management company. So.
And is there a lot more margin on,
Yes.
like, if you look at your thing, you're making the majority of your money from the trade side of it?
Depends on the month. However, I could associate an average across all of them. On the constructions and trade side, you can have much bigger wins, but you can also have much bigger losses, right? Property management, if you're doing things right, you're going to straddle a 15 to 25% margin if you're doing things well. In the trades, you can go from 5 or 6 to 30, right? There's a big gap depending on how good you are in quoting, how good your team is and your staff is, and how efficient you are. So there's a big delta there. We started off where, our first year in landscaping, like, we lost money. It was like, holy shit, we gotta figure this thing out. And it took time. It took a lot of, mistakes to figure that out. So now, most of those divisions are running either at or pretty close to a 20% margin. So.
And what would you, for someone starting out who likes the idea, what would you say would be the first vertical?
If you run and operate a property management company, maintenance is number one. Absolutely 100%, because it's so important to the management company. To me, growing and scaling a management company without your own in-house maintenance is crazy. It scares me that I would have to rely on so many third-party trades if I got 500 or 1,000 doors. Like, that's a lot of stuff going on, and the lack of control would make me a little bit nervous. So we've always loved having our own internal maintenance crew, and then you can make a decision on whether or not you want to outsource those to the general public and have handyman a la carte type services, or offer painting to the general public or stuff like that.
And do you get pushback from owners when you own all the sub trades that they don't like
No.
it, that it's like not arm's fine?
It's usually the opposite. They love the fact that they're getting one phone call and Tony can just take care of everything. But you have to have a level of transparency, right, and a trust with these different relationships. Coming into this, all of our owners are, of course, they're well aware of what we own and what we don't own. They are not forced in any way to use our services, right? For the most part, we're a vendor. So we'll give a quote, we'll bring 2 other quotes to the table. Mr. or Mrs. Owner, you can decide which one you want to go with. When it comes to day-to-day maintenance, yes, that is our team that takes care of that. But bigger jobs, bigger renovations, stuff like that, we always get third parties because we want our owners to know that there's different options.
And have you found it's better to buy an existing company, like a landscaping company or painting company, or start your own?
100% acquisitions.
Yeah.
Yeah, a lot easier. You're buying, hopefully for the most part, instant cash flow. So learn to do your due diligence when you're looking at a company. But we've done 4 or 5 what I call incubate and launch, meaning we started internally by hiring staff and then we figured it out. The 2 acquisitions that we did were by far a lot easier, right? So we bought the company, we bought the income, we bought the assets, we bought the branding, and the operators came with it. So 30 years of experience, they're now coming into our environment and helping run the company, so that it gives us the time to learn it, right? So we're going on year 3 on the 2 businesses we bought. We bought a concrete business and an appliance repair business, and they're both going fantastic.
And you rebrand them to yours, or you always keep them the brand they have?
No, so the concrete company we left alone. We're not rebranding into any of our stuff because their brand was very strong. So we didn't want to throw that out, right? Because we paid for that. The appliance repair we've rolled it into Core. So we have Core Appliance Repair at this point.
That's your company name? Or,
Yep.
Yeah.
It's called Core Property Services, but we have different divisions. We have Core Maintenance, we have Core Landscaping Construction, and we have Core Appliance Repair.
And I seen you just bought another building there. Is that kind of the new?
Yeah, well, so I'm also an agent, a realtor, so I do a lot of buying and selling, traditionally just for my owners, right? It's just really to help facilitate deals within our portfolio. And I'd say over the last 5 years, especially through COVID, it was a matter of giving all the deals to my clients. It's like, hey, here's a building, here's a building, here's a building. You know, people were just buying left and right, as I'm sure you're well aware. So we were we were in the back seat when it came to that. Coming into this year, we've kind of, we've been stockpiling some cash over the last 3 or 4 years, and we're now at a point to where we've been ready to pull the trigger on buying stuff. So we've got 100 units in our portfolio, in our acquisition pipeline. So we closed on 24 yesterday. We've got 64 that's closing next year, and we've got another 12 unit closing in November. So we're aggressively looking for deals. We think that a lot of people are going to be upside down with these interest rates when they come to renewal. So I think there's going to be opportunities to be had for quick exits, and we've positioned ourselves right to where we can act pretty fast on if the numbers make sense. We can make a deal happen.
That's good. I think coming from your background, it's good. A lot of people I see now that are starting to buy or that are getting into real estate, they have no background in actually managing it, and they're just looking at, it isn't that hard to finance and buy a building.
Yep.
And I think in the next, little bit here, whether it's 3 years or whenever the crash comes, I think like you said, when the interest starts piling up is when you'll start to see the operators from the guy who just bought a building, right?
100%. And, we just refied 2 buildings, a 12 and a triplex. And we went from, 3.6, 3.8 interest rate to 6.1, 6.2. So overnight, our cash flow was decimated, to the point to where, we're going to have to probably weather some rainy days and some tough months. So, but again, we've done this, I think smartly. We've built the cash reserves to be able to withstand that. Interest rates will come down. So we always think, of course, long term. So it's not a 1 or a 2 year thing unless we're working on a flip or a repositioning. So we just set ourselves up properly. And right now, again, it's just sitting back, looking for those opportunities to be able to hopefully bail some people out, or people that got into the market and they had no business getting into it, and they want to get the hell out. So,
yeah. Well, I hope it comes out here. That's my issues. I want to be buying and that no one wants to sell. But I think I think it'll take some time. When I think that 5% loan from CMHC, so many people, you just look, $500,000 gets you a $10 million building, and they don't understand that if you put another $500,000 into it and in fixing stuff up, your return is gone and you're probably not making money. And
there's so many, like, again, I have the luxury of seeing things from a lot of different from perspectives. So being the property manager and seeing the financials of, all these buildings, and then seeing the FOMO that happened during COVID of all these real estate investors wanting to be real estate investors. And it's going to be interesting to see kind of where all this goes. I think the people that were in it before, they will continue to do well. But I think there's a lot of people that are going to find themselves in a pretty challenging situation.
Yeah.
We'll see.
Two of the last guests I've had on actually were on, they both were talking about the 18-and-a-half-year real estate cycle. Have you ever looked into that at all?
No,
No,
never
you
heard
should.
that term.
It's pretty predictable, and
Yeah.
it's cool because it lines up. There's a commodity cycle, there's a 100-year economic cycle, and then there's these.
Yep.
The 18.6 is an average. It goes from about 17 to 20, and there's 14 years of growth, and then there's a period where something happens that would have been COVID for us right now,
Yep.
and kind of all these cycles are lining up for 2026, 27 is when, we should be kind of at the peak.
Yeah.
And I think right before the peak happens, it's always a big, there's that big rush where everyone's panicking and getting in, which I think we would see today if interest rates were lower.
Yeah.
Because right at when interest rates were 2%, everybody was buying real estate.
That's free money.
Yeah, and people that shouldn't have. And I think we'll see that again, and it's going to be, and then the opportunity will be on the other side of that. But you don't want to miss out on the next couple of years of upside either.
No, and I think there's such a demand for housing right now. Being in Atlantic Canada, where you're at, I think it's it's across the country. It's all over the U.S. It's in a lot of different places. We're bringing in like record numbers of new immigrants into Canada, and from the building perspective, they just can't keep up. They can't build enough units to satisfy the demand. So governments are, they're trying to come up with all sorts of different programs to be able to help developers build more, build faster. But now we're running into trade issues all over the place. We just can't find people to build the damn things. And it's just like, it's very frustrating. But particular where we are, we see a good continued and sustainable plan going forward in terms of bringing in people. We're a small city. We're only, again, 180,000. So as long as we have that, the economics of our city is good, our location is good. Again, you got to do your due diligence in terms of where you're investing and make sure the economics, match kind of what you're looking for and for long-term growth. But we're going to be getting into a build next year, which we're pretty excited about. We bought some land a couple months ago, so we're going to do our first build. So that should be interesting. But we definitely see buying over the next couple of years where there's opportunity and the valuations make sense, which is challenging to find, right? Like you're saying, either sellers don't want to sell, or they've got a number that's just so ridiculous that it's just, the numbers just don't make sense.
Yeah, here it's just they don't want to sell. I mean, everybody can see where rents are going, and interest rates are projected to go down, and there's a big spread there.
Yeah.
But so here, like when I moved to Edmonton, vacancy was about 7%, and right now we're sitting at about 3%, and they're predicting in the next 18 months will be at about 1.3%. And we're seeing that, like, we have hundreds of units, we don't have anything empty, and we're seeing, we'll get 20 calls for like it's something I never thought we would see.
Yeah.
And you mentioned there being a plan to bring people in. I see the plan to bring people in, but I don't see any sustainable, nothing real to build more houses. I mean, we tried this year and we way undershot our target in Canada.
Yep.
So we were a third of the population, our population grew by 1 million and we built 300,000 homes.
Yeah.
And we're already the lowest. So if they gave you, if you were tasked with being the minister in charge of housing, what do you think is a solution for?
Well, I think right now the government and a lot of different people in power are making it incredibly difficult for developers to develop, right? The cost of development is ridiculous right now. It's just really, really expensive, and it's getting to a point to where it doesn't make sense to build because you can't get the rents up high enough to make the numbers make sense. So I think there needs to be I think a lot of locations need to be focusing on densifying certain areas. So one of the big issues that we have here where I live is sprawl, right? So the city's getting wider and wider when it should be becoming more and more dense to allow, higher, bigger buildings, more people in an area. Then you can have more restaurants, more bars, and all that type of stuff. So I think it's working with developers and incentivizing them to build, whether if it's property tax breaks, government, if they're in different cities where if they own a lot of land, right, that could be something that they could be sold at a discount or whatever. But it's really working better or closer with developers to help them build these buildings, and creating programs that allows not only the biggest developers in the country to get in on this, but how do you get guys like you and I that can build a 12 unit or a 24 unit or a 32 unit? How do you make it attractive for us to build stuff like that, right? I don't know if they're putting a lot of attention on that, right? They're working with a lot of the big developers that build the 100, 200, 300, massive towers and stuff like that. But, there's not a lot of those across the country. But if you look at a lot of smaller cities across Canada, you're going to find a lot of places where we're still building 12s and 18s and 16s and 24s. So how do you make it doable for them? And CMHC is the same thing. We're being hit. We just got hit with a double whammy. Interest rates are going skyrocketing, and CMHC just put up their premiums, and it's like, making it harder once again. It's costing us more money. So it's like, I don't know what the solution is, but I know there has to be something to make it easier for developers to develop.
Yeah. That's the one thing I do like. Pierre, he talks about housing a lot, and his big push is he thinks like hold back funding for cities if they don't permit.
Oh,
and he's like, because you can't get involved in, but he says, if they're not issuing a permit and he had a number at 60 days or 30 days, then they, they don't get federal funding.
Yep.
And I like stuff like that, like, because at every level of government, there's pushback. Here we have a big piece of land in the city owns, and it sat empty for years now. There's a couple townhomes, but they made it, the requirements to build on the environmental front were so big, and it had to be geothermal, that it's just too expensive to do it. No one can do it, and it's this big piece sitting there. But yeah, I like that idea. Getting the smaller guys involved and just everybody, I think would.
Yeah, and then there's the whole conversation about low income housing, affordability, all that stuff, right? So building a concrete building is expensive. Anything with underground parking and concrete and elevators and all the bells and whistles, granite countertops or quartz, like big rents, it's not really categorized as affordable. So again, how do you build affordable housing to where it doesn't need to be all brick and fancy, it can have normal siding and, very simple finishes so that you can build stuff. So maybe it's building, incentives or grants for people. Like I think Moncton, New Brunswick in general does a decent job with that, to where we can partner with the province on building affordable housing. So we're building a 16 unit, and this is something that we're going to explore, to where they have a program where they'll subsidize, a certain percentage. They'll give you a certain amount of dollars per unit to build it, and then they'll give you a number of subsidized units in the building, which is usually 50%. So for example, the government will give you 50 grand per unit to go against your construction costs, and they'll subsidize, in my case, 8 of the units for a 20-year period, meaning that they will supply the tenants, the rents are guaranteed, but you have to keep them at a certain level. You can't go above a certain rent. That complicates things. I like the construction money. I like that they're helping with the build. I'm signing a 20-year 100% forgivable, basically second mortgage on this, which is fine. But where they kind of got you by the neck, it's like, oh, well, you can't put your rent above this. I'm like, well, the numbers don't work anymore. It's like you need to increase your affordable, or like you need to subsidize more of it so that I can build it, so that I don't go out of business, right?
Yeah, that's definitely a problem, and I think same with CMHC, like the 5% loan. Everybody's doing it on the affordable.
Yeah.
And I don't know if they're, we've done it once, and we would do it again, but we don't. We try to get I think we did 40% on affordable, and the rest we could do on energy.
Yeah. We're on this build, we are staying away from the affordability.
Yeah.
We'll try to get our 100 points through the energy, which I think we shouldn't have a problem because it's a brand new build. But yeah, I do not. There's part of me that, and I've been told by, the people that I work with and my mortgage broker, and they're like, "Eesh, you get locked into that stuff. It's tough."
Yeah. Yeah, and actually, I'm talking with a guy, or one of my friends just bought a building, and he got a bunch of points on accessibility. He said they just changed the rule on it. Like it used to be really strict, and when I did it, they said you wouldn't even get it. Like it would, or it would cost so much. But they've changed the rule now, and it's a lot more easy to work with, so you can get points there. But what I always worry is, I'm like, do you have rent control there or no?
We don't.
No. So we don't here either. And I'm like, when you're capping that, if you cap 80% of your rents, you can only increase it whatever the government allows. That there's nothing stopping your utilities from going up 100%, and you cannot make that cost back. And I just think it's the opposite of what it should be, where the bank is, that's the only way they want to lend you money, but you're locking in your income. So your debt service is already so low, and now people are going to hamstring the income and your expenses go up. And I'm hoping
it's a little lopsided in terms of how all this stuff is done. And I agree with you 100%. I've seen insurance premiums double in a year due to a claim. I've seen basically everything across the board, from maintenance, snow removal, to lawn care, to roofing, to material costs, flooring. All of that has gone up 20, 30, 40, 50% over the last 3 or 4 years. And try to recover that much in rents, it's incredibly challenging. And if you're capped, then it's like, oh my God, it's a horrible. I feel bad for other provinces that have the caps. Luckily, I'm glad we don't.
Yeah. Do you ever look, at the beginning you mentioned that a bunch of your clients or the people you interact with, or maybe this was before we started the podcast, were from the States. Have you ever looked at moving the business down there or starting down there?
So I coach a lot of property management business owners all over the U.S. The conversations that we will be having, or that I will be starting to have, again, is more so about packaging up what we've done in terms of looking to partner with other great operators in the U.S. We've also entertained investing in different markets, because one of the great things is, in my opinion, a great property manager is an investor's secret weapon. If you've got a really good PM that knows their market really well, like, they can really help advance your investing faster. So what's cool is I'm coaching all these great property managers in all these cities across all of the US. If I find some really good ones and they come up with deals, like, I have that much more confidence to say, yeah, I would 100% buy that 50-unit complex in Birmingham, Alabama, because I'm coaching this management company and they rock, right? I'll be well taken care of as long as I can figure out the mechanics on buying that or putting that deal together. 100%. We've looked at it. We've never done anything, but it's been something certainly we've been interested in pursuing at some point.
Yeah. I think there'll be a lot more pain there than we'll see here too.
Oh yeah.
I was just reading, I think in Houston alone, there's 200,000 apartments that are under their debt service and their loans are coming up this year.
Yep.
That's more apartments than all of Alberta by quite a bit. And
So
those are just the ones.
Yeah. So do you know Marcin DeRozan? He runs M1.
Yeah, I've seen him. I don't know him. But
Yeah. So him and a friend of mine, Nick Skalkos, they just bought a 140-unit complex just outside of Houston.
Yeah.
And very similar to what you're saying. The building was upside down in terms of its numbers, and they got it at a great deal. And yeah.
That's good. Well, let's touch on your program a little bit more there. If someone, is it for people who haven't even started a property management company, or they already run one, or what's the idea?
So over the last 3 years, my focus has been just working with property management company owners that they've already got a management company running, usually 100 doors or plus, and they're starting to hit different pain points, whether if it's operational, systems, technology, because I have a lot that I can add to that, or they want to start being surrounded by other people that are looking to scale, looking to grow. So, there's a huge mastermind, component to our coaching program. Going into next year, the program's changed a little bit to where my second book is being worked on, and we're now kind of removing the emphasis just on property management, and it's really about small business, on how can you take any small business and turn it into a business platform that can be vertically integrated with other services? So that's the general thesis going forward. So next year, I'll be working with all different types of business owners. I'm still very involved in the world of property management because that's my thing. That's kind of what I focus on. So yeah, the majority of the people that I work with are in that world. That their initial pain points aren't how do I scale. Their original pain points are, how do I get control of my systems? How do I get out of the operations of the day to day? How do I fix my branding? How do I, get more doors? How do I sell more? So we work and we solve a lot of those problems because the business needs to be set up in such a way to where it's ready to go to the next step. And I'd be doing everybody a disservice if we just jumped right into, okay, let's start on buying a business or growing this when your other stuff's, it's a complete shit show. So stabilize what you have. And then there's, what we call our middle phase, which is basically all about optimization, right? So it's optimizing your systems, your infrastructure, your workflows, automations, playbooks. Then you look at your team to make sure that they're self-sufficient. You've got systems in place. And then it's about me as the operator, as the business owner. How do I become ready to not let go of the baby, but step away and have my focus and energy in another area so that I can help grow and scale the empire. So there's a lot of strategic steps in terms of what's included. It's a very complex process. So that's kind of what we're focused on going into next year.
And it's always for the business owner, like someone wouldn't send their property managers to a course, or do you have anything for them? No.
Not per se. We hold quarterly workshops. That's something that's completely open to anyone. So in November of this year, we're holding a 2-day virtual workshop, which is a planning and business review and planning mastermind workshop. So I've got property management company owners, I've got plumbing companies, I got all sorts of different business owners and their teams attending this 2-day workshop, because what it does is I walk them through a set of exercises to get clear on setting benchmarks in terms of where the business is today with 4 key areas: sales and marketing, operations, protection. So what are the different things in place to be able to protect what you've built, such as, do you have a will in place? Is your management agreement in place? Do you have, proper insurance in place, liability, E&O? And then we talk about people. Do you have, what does your people situation look like in terms of your team, your personal life, yourself as the business owner? Are you doing the right things for yourself to keep yourself motivated, healthy, all that stuff? And then day 2 is all about setting new targets going into the next year. So it's kind of like a lead-in going into 2024 of like, is your business ready? What are you looking to make changes in? And it's an amazing experience. We've been doing this for 3.5 years. We get together every quarter for 2 days. Every time it's amazing what people come out of this with in terms of the clarity of what they need to work on next. So it's a pretty powerful thing. That would be completely open to anybody.
You mentioned the fitness in your opinion. How big of an impact is that on your business, sir?
Huge. Massive. I did my whole upbringing. Athletics has been a big part of my life. 10 years of bodybuilding, owned a CrossFit gym, then got into triathlons, did an Ironman a couple of years ago, marathons. Now it's just about, keeping in good health, continuing to go to the gym. I'm a massive believer in all things, personal development, whether if it's body, whether if it's my, my health and nutrition, or if it comes down to breath work, meditation, keeping still, being able to do deep work. These are all just tools in my toolbox to be a great entrepreneur. I'm a father of 3, so I've got a pretty busy life, and I want to be around, I don't want to die young. So I take really, really good care of myself. So health and nutrition is way up there.
That's good. Yeah, we got a lot in common. I actually I owned a gym, and I got kids and stuff as well. Yeah.
Oh, amazing. No, owning a gym was I will say it was a passion play. It was a horrible experience. Did not like it at all. But at least I got the experience of it. Learned a lot of valuable lessons, and I now know to stay in my lane. Real estate, property management. That's what I do. I'm not a gym owner.
For me, we had a good experience, but we
Okay.
just missed the bad experience. We sold it. Our gym was called Fit 24/7, so it had
Okay.
never been closed. It was always member access. And the week that we handed the keys over was the first 2 weeks of COVID, the first two flatten the curve. So the guy shut down, for 18 months. He wasn't able to open. So, and our whole life trajectory would have changed. That was our income. We had to add in some mobile home parks at the time, but that was, that would have, it wouldn't have ended us, but it would have been, we would have never moved out to Alberta and started the company and stuff. So, but it was definitely a passion at the beginning. And I did that, just so people don't think I just said that. I have this book from when I initially started, and I'd highly recommend everybody go give it a read if you're interested in anything with social media. If they want to check out your program, or what's the best, where are you active?
Best way to find me is search DoorOpener on any social channel. You'll find me, or DoorOpenerAcademy.com.
When is the new book coming out?
Let's say probably late next year. It's a lot of work writing a book. So I haven't put in exactly a deadline, but the focus is to get it done for 2024. So probably more so towards the end of next year.
It sounds good. Well, maybe we'll have you back on when you're ready to promote that book, and you can talk about that.
Amazing. Appreciate it.
Well, yeah. Thanks for coming on today. That's about an hour. So
cool, man.
Really enjoyed it. And I think, people will really get a lot out of it. That property management's interesting. So
sweet. Thanks, Shane.
Thanks again.
Thanks a lot for listening. If you guys do have any questions, feel free to send them our way, and we'll answer them on one of the upcoming episodes. It definitely helps us out a lot if you guys can rate the episode, go write a comment. Goes a long ways as far as getting us out to new people. So that'd be much appreciated. Thanks.